Oh, look at you
full.
using. Oh, look at that. I'm gonna have to look that
You
word
know,
up.
I was in
Mon-
college.
I love it. I love it.
Yes,
Okay.
it.
As people go to buy houses and they
Mhm,
reach out to you,
mhm.
have you seen that? What has changed as far as the standards of
Oh,
lenders and banks, as far as people getting approval?
a lot. I guess the best way to say it in a layman's term is you all have to consider the fact that when things are going good for everybody. And when things start to make a turn, they make a turn for everybody. And
Yes.
so less lenders and just more of the overall system, it's going to start to be a little bit more cautious with who we're lending out money to based on, you know, things that we forecast to be coming in the future, right? So we feel that there is a recession that is on the horizon. We're going to start scaling back just a
Yeah. Yeah.
little bit. Things are going to tighten up just a little bit. Things are going to not be as easy for some borrowers as they have been in the past, just to make sure that we are embracing future economic changes.
So, in the past 2 years,
Mm-hmm.
I've been telling, a little more than 2 years, I've been telling anybody and everybody to buy for several reasons. Yes, prices have been going up. If you
Mm-hmm.
bought even 2 years ago, at least in the Charlotte area, you would have at least 30% equity right now, right?
Yeah.
So, but I've been telling people to buy because it was just credit was more freely given at the
It's
time.
available.
It was
Mm-hmm.
available. It was a good time.
Yeah.
During a good time, more people are able to get approved, able to move forward and get a home and get on the property ladder.
Yeah.
And people think that they want a recession or they want houses to crash. And I get it. House prices and everything has gone up. Rent has gone up as well.
Mm-hmm.
But people say they want things to crash, but they don't understand um, if the economy takes a downturn,
Mm-hmm.
lenders get more restrictive. They get more cautious, like you said, as far as who they lend money to.
Mm-hmm.
So you could have gotten approved in 2020, 2021, even early 2022, but your credit profile could be the exact same right
Mm-hmm.
now
Yeah.
and not get approved. But hey,
Mhm.
the market is shifting. You
Yeah.
got what you wanted, you're just not able to take advantage of it.
Congratulations, you played yourself.
Very.
So how can people get their credit where it needs to be, or where do you recommend it needs to be or should be, so they can take advantage of these properties being on the market for a little longer?
Well, I will say in lending standards, again, everybody's always trying to reach for this brass ring of a particular score, right? I
Hmm.
always see realtors, all you need is a 580 credit score. Uh, the lies, okay? It isn't all you need is. It is an amalgamation of things.
Yeah.
It's a
Oh, look at you
full.
using. Oh, look at that. I'm gonna have to look that
You know,
word
I,
up.
I was in
Mon-
college,
I love it. I love it.
Yes,
Okay.
it is.
Yeah.
It's an overall credit profile, and your credit
Hmm.
profile, whatever that score is, it's things that make up that score. We're not just looking at the credit score, but we're looking at your assets. How much money do you have after this transaction has ended? Do you have, 2 months, 3 months, 6 months, a year of assets in the bank of mortgage payments, is what we call reserves,
To be able
to be
to
able
cover
to,
it
in the
in
event that something
this
happens.
something happens in this crazy
Yeah,
economy where nobody actually knows what's going to happen.
yeah,
Lenders want to feel secure
yes.
knowing that they're lending this huge amount of money to you. If you lose your job, are you able to keep yourself afloat for 3 months, six
Mhm.
months, a year?
Yeah,
And that's what they're looking for. So it's
yeah.
not just about the credit score.